Good morning everyone. My name is Muhammad Azazim Rashidi and my matrix number is 2021829672. Today, our teammates and I are going to present segmented and interim reporting for our chosen company, which is Samir Berhad. Before we start, let me introduce our fellow teammates.
My name is Wan Amirul Haikal by Ismail, and my matric card number is 2021823008.
My name is Idris bin Abdul Hamid. My matric number is 2021887606.
My name is Ahmad Altaf bin Manasseh and my matric number is 2021600578.
Before we start, let me give explanation about what is segmental reporting. Segmental reporting is a component of an entity that engages in business activity and regularly reviewed by Chief of Decision Making for resources allocation.
As a kickstart to our presentation, we would like to tell a little bit about company backgrounds. Samir Berhad established in 1974 and it is also one of the Malaysia's largest conglomerates with 12 business divisions that operate across 50 locations worldwide. The company was listed in Bursa Malaysia in 1984. Sunway Holdings Incorporated Berhad commenced operation in 1986, mainly to develop the Bandar Sunway Township in Petaling Jaya.
For the Samir Berhad vision, their vision is to ensure healthy lives and promote well-being for all ages, and also to bettering lives through quality education. For the Samir Berhad mission, we strive towards creating sustainable developments where people live, learn, work, play and stay in a healthy, safe and connected environment. There are three factors to consider having a segment reporting. One of the factors is nature of the business activities. It is identified by any activity carried out by an entity with the main objective of profit maximization. For the second factor is existence of managerial responsibility of the activities. It is identified by any activity carried out by an entity with the main objective of profit maximization. For the third factor is information presented to Board of Directors. The Chief Operating Decision Maker shall refer to the reports of sales assessed by the Board of Directors as it is contains of valuable information regarding the overall performance of entity. Now, we are going to discuss type of segment of the Samir Berhad. There are four types of segments of the Samir Berhad. Samir Berhad is a Malaysia-based investment holding company. Its segments include property development segment, which is engaged in the development of residential and commercial properties. Property investment segment is involved in the management, operation, and letting of properties. Now, we are moving to the second types of segment, that is construction segment. Construction segment is involved in the construction of building and civil works, provision of mechanical, electrical and building works. Now, moving to the third types of segments, it is trading and manufacturing segment. It is engaged in trading and manufacturing of construction and industrial products and building materials. Moving to the last types of segment, it is quarry segment. Quarry segments is involved in quarrying, manufacturing and supplying of permits, manufacturing of ready-mix concrete and production of building stone. Now, we are going to discuss Chief of Decision Making (CODM) and its responsibilities. For the Samir Berhad, we have Liu Kok Wing. He is Group Managing Director of the Samir Berhad, and his responsibilities is reviewing strategic plan and adopting in company-wide strategies. For the second point is make strategic decision about resource, allocation and evaluation the performance of the operations. For the third point is overseeing the conduct of the operation. And for the last point of responsibilities is identify areas of improvement to increasing productivity.
Sunway Berhad consists of few operating segments, which are property development, property investment, construction, trading and manufacturing, quarry, investment holdings, and others. The significant product or services of Sunway Berhad should be reported as a separate operating segment. However, only segments that exceed the 10% threshold are required to be reported. So, how can we identify which segment fulfill the 10% threshold requirements? It can be calculated using three bases: revenue basis, profit basis, and asset basis. And also, two or more operating segments may be combined if it's below 10% threshold. We use a profit basis to apply the 10% threshold, which is the total profit for each segment divided by the total profit for all segments. We can conclude that only 4 segments are property development, property investment, construction, and trading and manufacturing. After determining the reportable segments, the entity should ensure that the total external revenue attributable to those reportable segments is at least 75% of the entity's total external revenue. If the 75% threshold test is shown when the total external revenue for all reportable segments is divided by total external revenue times 100%. As a result, Sunway Berhad will get a total external revenue of 77.75%, which is more than 75% requirements. There are no additional operating segments that need to be reported to meet the 75% threshold. To have 4 reportable segments and 3 non-reportable segments, the new adjustment have been made for all segments in Sunway Berhad segmental report. As you can see, 4 reportable segments are separately disclosed, which are property development, property investment, construction, and trading and manufacturing. Meanwhile, quarry, investment holdings, and others will be under the non-reportable segments category as it fails to meet the 10% threshold test requirements. Next, I will explain the advantages of segment reporting. The first one is the separation of profitable segments. It will disclose which areas are profitable and which are drains on the bottom line. Second one is an accurate investment. It will enable Sunway Berhad shareholders to understand better the variance that may affect the overall numbers. The third one is the lower cost of capital. The risk of investing in a firm stock that reveals all information is lower than the risk of investing in the supply of a company that withholds information. But when there are advantages, there is also will be disadvantages. The first one is data manipulation. The segmental report can be manipulated as well as it may be reported through the view that the management wants user to see. Secondly is the base of segmentation. Segments can be created in various ways depending on the segmentation base. It is also challenging to identify a segmentation base.
The group has prepared its financial statement using the Malaysian Financial Reporting Standard, which is MFRS, for the financial period ended 30 June 2022. The interim financial report is unaudited and is prepared by accordance with MFRS 134. Interim financial report and paragraph 9.22 of the Bursa Malaysia Securities Berhad listing requirement. The interim financial statement should be read in conjunction with the audited financial statement for the year ended 31 December 2021. These explanatory notes attached to the interim financial statement provide an explanation of events and transactions that are significant to an understanding of the changes in the financial position and performance of the group since year ended 31 December 2021. The accounting policies and method of competition adopted by the group in this interim financial report are consistent with the adopted in the annual financial statement for the financial year ended 31 December 2021, except for the adoption of the following new MFRS and amendments to MFRS that are effective for financial statement effective from 1 January 2022. The first one is MFRS 3, referring to the conceptual framework. MFRS 3 requires the entity determine whether assets acquired and any liabilities assumed constitute a business. If the asset and liabilities are not considered to be a business, then the transaction should be accounted for an asset acquisition. MFRS 3 has detailed guidance on the definition of a business. The second one is MFRS 116, property, plant and equipment, proceeds before intended use. MFRS 116 are tangible assets that are held for use in the production or supply of goods or service, for rental to others, for administrative purpose, and are expected to be used during more than one period. However, MFRS is not applicable to the following, such as PPE, as held for sale, FAR5. Investment property accounted for using fair value, IAS 40. Biological asset that related to agricultural activities, IAS 41. Exploration and evaluation asset, IFRS 6. The objective of the standard is to prescribe the accounting standard for property, plant and equipment, and change in such investment. The principal issue is accounting policy of PPE are the recognition of the asset, the determination of their carrying amount, and the depreciation change and impairment loss to be recognized in relation to them. The last one is MFRS 137, onerous contracts, cost of fulfilling a contract. MFRS 137, provision, contingent liabilities, contingent assets, defined, and onerous contract as one in which the unavailable cost of meeting the obligation under the contract exceed economic benefit and the entity expect to receive. The unavailable costs are the lower of the cost to fulfill the contract and any compensation alternatives arising from failure to fulfill the contract. There were differing views on which cost to include as cost to fulfill the contract when assessing whether a contract is onerous. Some entities considered only incremental costs, whilst other entities included both incremental costs as well as allocated costs, leading to material difference in the financial statement. Type of interim report prepared by Sadwi Berhad are: number 1, unaudited condensed consolidated income statement. Number 2, unaudited condensed consolidated statement of comprehensive income. Number 3, unaudited condensed consolidated statement of financial position. Number 4, unaudited condensed consolidated statement of change in equity. And the last one is number 5, unaudited condensed consolidated statement of cash flow.
The interim report that Sunway Berhad used is quarterly report. As it's shown in this slide, the first quarter is from January until March 2022, and the second quarter is from April until June 2022, and the third quarter from July until September 2022, and lastly for the fourth quarter from October until December 2022. Now we will continue our presentation by stating the period of current and comparative of each statement. For the current statement of financial position is at 31st December 2022. The comparative is at 31st December 2021. For the statement of profit or loss and other comprehensive income for the current year is from 1st October 2022 until 31st December 2022. And its comparative is at preceding year from 1st October 2021 to 31st December 2021. And for the current cumulative is from 1st January 2022 until 31st December 2022. and the comparative is from 1st January 2021 until 31st December 2021. Next, for the statement of changes in equity, the current period is from 1st January 2022 until 31st December 2022, and each comparative the preceding year from 1st January 2021 until 31st December 2021. And lastly, for the statement of cash flow, the current period is from 1st January 2022 until 31st December 2022, and its comparative the preceding year is from 1st January 2021 until 31st December 2021. For the first adjustment during the year 2022, there is a transfer of investment properties to properties, plant and equipment with an amount 43,800,000. So, the adjustment for the investment properties amounting 1,330,110,000 will be deducted with 43,800,000 because of the transfer, and the new amount to be reported for the investment property is Rm 1,286,310,000. For the second adjustment is inventories. Cost of inventories at 31st December 2022 is Rm 2,279,500,000, and for the net realizable value is at Rm 1,839,700,000. To decide the value of inventories, we will choose which one is the lower between the cost and the net realizable value. And based on our observation, it's shown that the net realizable value is lower than the cost, and it can be concluded that the value of inventory as of 31st December 2022 is Rm 1,839,700,000. Here are the extract of the financial statement based on the adjustment we have made, which show the effect before the adjustment and the after effect of the adjustment. For the investment properties, before the adjustment, it is amount at Rm 1,330,110,000, and the amount decreased after the adjustment, which the amount stated at Rm 1,286,310,000. For the inventories, the amount before the adjustment is at 2,279,500,000, and the amount also decreased after the adjustment has been made, which is an amount at Rm 1,839,700,000.